Okay, good evening. Good evening again, and good afternoon for those who are in the West. So, welcome back, and today we shall be discussing about support and resistance. We have done this previously, hence, this should not be very difficult today. As a matter of fact, it should be fairly easy for many of you by now. All right. So I will use the PowerPoint to illustrate a few things, and then, if possible, then we'll jump into the charts. All right. So support and resistance. So I'll start off with a bit of background information. Okay. We say that the concept of support and resistance forms the basis of forex technical analysis, and for many of you that have been around taking our classes and so on, you're probably very familiar now with the terminology technical analysis and fundamentals. So when you talk about support and resistance, they form the basis of forex technical analysis. So these are like people who have studied the charts, studied everything, and are able now to analyze. Okay. So for you to be able to analyze the charts, you need to understand support and resistance. I said the other guys who listen to the news and all the stuff and analyze the news are called fundamental analysts. So the same, okay, fundamental, okay, fundamental analysis. So for some strange reason, some people still prefer to listen to news than trade, which is fine. It's fine, okay. And then there are others who now prefer just to study the charts, study the patterns they have there and everything. Those are the ones we're calling technical analysts. Okay. Then there are those who are called just price action. They look at the price, the way the price goes up and down and so on and so on, and they analyze based on that. So today we are just talking about the group of people, or rather the whole idea of just looking at support and resistance. So forex traders look to sell. This is the fundamental. I think you are told, about forex trading. Okay, that you sell near the areas of significant levels. Okay, or you buy again. So you sell when the market is going up. Sorry, you buy when the market is going up, and you sell when the market is going down. So support and resistance is one of the most widely used concepts in forex trading. But strangely enough, everyone seems to have their own ideas of how you should draw them. So the biggest contention in this analysis usually is, do you want to include the wicks or the body when you are drawing your charts, your whatever support and resistance? So basically, we are saying when you're drawing your support resistance, do you draw it up there on the wicks, or do you draw it on the body? So there are people who are of the school of thought that you should include the wicks, but then others argue that no, this is where the price actually closed, because they got there and they were pushed back. All right. So again, we will discuss a little bit about this concept of price. Why is the price being pushed back from there? All right. So we'll get to that in a minute. All right. So if you look at a candlestick chart, support and resistance means you have to draw your lines. You have to draw your lines of support and of resistance, uh, which is what we are looking at today. All right. So technically, in this, I want to draw a line. So we would then look at where where these turns are. There's a turn over there, and then another one over there, another one over there. Okay, these are the major turns. But when we're talking about drawing a line of support or resistance, we look at the turns or the point where the market has touched several times or continuously. Yeah. So in this case, yes, we can include that, but this is better, because if you draw a line here, you can see that the market has touched it several times. It has touched it there, it has touched it when it came down, it has come and touched it there. Okay, it has been touched several times. So we can say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 times. So that is a significant area. There are also others. As you can see, this is another one. Okay. But personally, I draw them on the body. I don't draw them on the wicks. Okay. On the wicks would mean would be drawing it over here. But no, I'm not drawing it over there. I'm choosing to draw it on the body of the, okay. And then the bottom one, we can have another one there. So as you can see, all the places those lines have touched are significant points. By significant, I mean, yes, they've been touched a few times, okay? Because otherwise you can draw so many lines. We can draw another one in there, okay? We can draw another one down there, and so on and so on and so on. So we pick the major ones, the major lines or points where the market has turned, like we have shown right here. So those are the major ones, the significant ones. All right. Sometimes we don't have candlesticks, or some people prefer to use different charts. This is the preferred, but then there are others who like the line charts. So I'm going to show you a line chart and how we can draw the support and resistance on a line chart, where this line chart is based on the same candlestick chart we have here. So let's look at the next one. There. So here, all we've done is removed the candlesticks, and now we've put the line chart. Some people argue that this is easier to draw. They want to use the charts to draw their support and resistance. Well, let us see if it's actually easier. Well, you just look at where at the top and you join the tops, something like that. The next one would be somewhere there. And please note, I'm not taking so much time thinking about it. I'm just drawing it because you can see it. You can see them. If you have to think, then it is not a significant turning point. All right. So for me, in this currency here, this would have been my major lines of support. Major. Now, if this was a daily time frame, if this was daily, Then what we would do, depending on where I want to trade, if I want to trade like a lower time frame, H4 or 1 hour, then what you do is you change. Once you've drawn the lines, the significant lines on the daily, then you move to a smaller time frame. All right. Now in the small time frame, you'll find that there's going to be a little more lines than what we have here. So, and sometimes you may have to add in a line, in between. But what I would do is use a different color. So for daily, you can use one color, and then for the H4, you can use another color. So by the time you're coming to your 1 hour, okay, maybe you're going to trade the 1 hour or 30 minutes or even 15 minutes. Okay, it would be good. I always suggest at least minimum of two. If you're going to do 15 minutes, then make sure you have the 1 hour and 30 minutes. Okay. If you're going to do 30 minutes, again, 4 hour and 1 hour. So at least two higher time frames to confirm your trades. All right. So in terms of marking your lines, you mark from the highest first as you come down to the lower ones. Once you have your 2 or 3 different time frames, then now you can jump into the trades. Okay. So now this is the line chart. Now for the other kinds of charts, it's very hard to draw them. The bar charts, I guess you can. It's just a little more difficult. And I don't even use the bar charts anyway. But there are people who might still like this. Okay. Again, the same thing. You kind of shoot for. Okay. There. And the thing to note is there is no perfect support resistance lines. Everybody has their way of drawing it. So whichever way you choose or you pick as your own, then you can stick to it and learn to trade with it. Okay. So there's no one who says because so and so uses wicks, then their lines are better, their support resistance are better. No. Plus, like I said, we are not really dealing with lines. We're dealing with zones. Zones. These are zones. Okay. And the zone idea should then make you comfortable whether you pick a wick or you pick a body. All right. So back to the charts. Those are examples of resistance zone and support zones. Okay. Now, the one thing I want to clarify here is, yes, sometimes when we are doing these things, you hear us talking about support, resistance, the same line is resistance, support, and so on and so on. So let's call this zone between, let's say, A, B, C, D. All right. So the basic thing I want to share with you is usually if you take, let's say, for example, somebody standing on the floor on your house, whether your house is a ground floor or first floor, it doesn't matter. The fact that you are standing on the floor uh, gives us an opportunity to illustrate what we mean when we talk about support and resistance. So the ground always supports your weight, okay? But your roof provides resistance in case something wants to go up that way. So this naming sticks. So the support is always the bottom one and resistance is always the top, which means that if the market is moving from point A to point B, At the point it's coming to B, B is a resistance zone for this market. Okay, so if this market X here, if the market is moving in here, and so on, then area B is a resistance zone for this market. Now, if it breaks that resistance and now it's playing in Y as it is here, so now the bottom part becomes the support, like we've just shown here. And the higher part here becomes its resistance. Now that is for this market here. As long as it's between here and here, then this is your support and this is your resistance line. When it breaks to the zone Z or Z, so if the market is playing around here now, then this, which was resistance, becomes the new support. It will support it there, okay? But it will resist it from up there. So what am I saying? I'm saying the same line, line C, can be support or resistance line depending on which side you're coming from or which side is the market going. Okay, so this line B can be support or resistance depending on where the market is going. And that is the whole concept of support and resistance. Okay, a market provides support when it's on top of a particular line. When it's going to go up, then there's resistance. All right, and knowing that is very important because you start understanding the really what's happening, the story behind the market. And like I said earlier, once you know the story of the charts, then you're home and dry. Okay, so a few more examples. Okay, support level 1, 2 is resistance level, as you can see. 3 is support, 4 is resistance. Please note this line here is both support and resistance at the same time, depending on where the market is. So at this point, because the market is coming down, this line is forming a support zone. Okay, then when it breaks, it normally breaks, then comes back, it forms now a resistance. Okay, the same line. So when people are trading, okay, and in this case the market has gone up, then it has come down and it has broken a support resistance zone. Usually you look for a retest. It'll come down a little bit and then it'll go back to test it before it goes back. It goes completely. This is a very popular trade. In fact, traders get excited when they see something like that in the market. When they see that breaking, they always wait for this market to go back and retest. So in this breakout here, there are people who will trade. They'll trade the breakout, okay? But a majority of people will wait for it to go and retest that zone. When it goes back there, retests, then now it goes completely. If it was a true breakout, okay? So you wait, goes back, retest, goes down. All right. Okay, more examples. Kind of like where you're supposed to be buying and selling. This gives the idea that whenever you have support at the bottom there, those are opportunities for buys. Okay, And similarly, when you have resistance at the top, those are opportunities for sell. So yes, you can buy at A, especially when it's a bigger time frame, because you'll know when this market has gone and has touched that line, and then you quickly prepare a buy. Okay, and then when it goes up and touches the top, you prepare to sell. Okay, and this is very easy because for a longer time frame, this might take like an hour if it's hourly chart, an hour, or 2 hours. So you cannot say that you miss the trade. You cannot miss the trade because you know if this is hourly or even 15 minutes, it takes 15 minutes for that candle to form and then another one to form, so you will know. So even if you miss that particular turning point, usually the safe traders enter at this point, at the end of that first one. That's when they enter. Why? Because now you're sure that actually it has turned. Okay, and the same thing comes down all the way down. But you don't enter a buy until you've confirmed it. How do you confirm it? After this first candle there. So you enter here. Okay. So it goes up, 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 and again here. You get ready for a sell. Touches the top, turns around. So right here, you enter your sell. Okay. Same thing. Buy, buy. Yeah. So this was good. At least it showed a few ways of getting in and out. Okay. So what causes this behavior, of the charts going up and turning, going down and turning, going up and turning, those lines that we talking about, okay? What causes those lines or zones to be formed? Well, the usual explanation is the market dynamics, okay, which in that case, you know about the push and the pull between the buyers and sellers, which is very, very common. Okay. We also know that okay, in that push and pull, sometimes the buyers win. I mean, the buyers win. Sometimes the sellers win, and that back and forth causes. Okay, actually, it's supposed to be like this. Okay, so sometimes it causes what we call almost psychological barriers at certain levels. Okay, now I once gave an example, but I'll try and give it again. Sometimes when we have prices, we don't understand why the market would be going, and then it gets there, it comes down. Okay, it goes there, it comes down, goes up there, it comes down. Then you wonder, what is it about this particular place? All right. In terms of psychology, people psychology, the buying and selling, you find that maybe, for example, maybe we live in a particular slum area. Let's call it, Kibera. Okay, Kibera in Nairobi for those who are in Kenya. Now, in the slum area, assuming bread is 20 shillings, all right, and with the time, because of demand supply, the price of bread starts going up. Okay, but you find that as it goes up, maybe it's 22, 23, people will still buy. 25, yeah, people will still buy. When you start getting 25, 26, you find out there are less and less people willing to buy. In fact, by the time you reach 30, nobody's buying at all. Yeah. Why? Because they think it's overpriced. Okay. Now we leave that market. You go to another market. Maybe now you are in downtown Nairobi. Well, at 30, the price is considered cheap. Uh, okay. At 30, the prices may be cheap. So now we are at downtown. So this is 30. So between 30 and let's say 50, people will buy. People will buy. When it's too low, 30, people will not even touch it. They'll be like, hey, something is wrong with that bread. Okay? They'll think maybe it's rotten or something. Yeah, then they will not touch it. But at 45, yeah, they are comfortable. They think it's high quality. When it gets to 50, they start saying, no, that is not our bread. That is for the the high market areas. So you find that by the time you're talking about 60 and 70, the people in downtown will not even touch it. Again, it's psychological. Nobody has said you cannot. No, no, no. It's just psychological. Then if you go to up markets, then the funny thing happens is the up market, if you have a bread that is 50, don't even touch it. They'll say that is cheap bread. Okay? Cheap bread. They don't eat cheap bread. So they will not even touch it. But as the price goes to 80, they're okay with it. Goes to 90, they're okay with it. And gets to 100, they're like, now I don't think we need bread anymore. So if this is 100, you'll find that now there are less, if any. But that area there is almost like psychological. Okay, so it's not a line. It's just an area. It's just an understanding, like a perception. All right. Okay, I think I've done an overview of what support and resistance is. So before I open it to questions, maybe I can go to the live market and show you again how to quickly, without thinking, how to draw your support and resistance. So I'll stop sharing this and then I will open, I'll use CTrader since now many of you are using CTraders. Okay, but it doesn't matter which platform you're using. You can use CTrader, you can use MT4, you know, you can use all the other traders that are out there. So it's opening. So I just want to show you and then open it for questions. Okay, there we go. Okay, CTrader. Oops. Uh-oh, I'm sharing the wrong one again. Not this one. Hmm. Sorry, I'm trying to open the right chart. Okay. Yeah. Okay, so on the CTrader platform or any other platform for that matter, what you do is you open the charts and then you maximize the zoom or rather minimize the zoom. So this is to maximize the zoom. If you do that, you will not probably see anything. But when you minimize completely, you get a better picture of what the market or what the charts are like. So I think I need to clean up the remove all. Okay, there you go. So now, apart from some trades that I have that are running, I've been running for a few days. This is what you have. This is 4 hour. Okay. So assume you want to trade 15 minutes. So we'll do 4 hour, and then we'll do 1 hour, and then we go to the 15 minutes for the actual time we are trading. So, and again, 15 minutes is intra-trade, intraday trade, which means you are likely to receive your results or your trades that are likely to trigger within the day on the 15 minutes time frame. So this is your chart. You've minimized completely. Okay. Then what you do, you mark your significant turning points. So you look at your line and find first the topmost. Now this is what I do. Okay, the topmost there, and then I go to the bottommost. Okay, there, and then from there, then now I come to the middle ones. Again, significant, which means it must touch several points. So I could go to that one, but okay, let me go for this one. That one seems to have more touch points. Okay, then I go for another one. Okay, I think this line again, as you can see, it's not rocket science. I'm just looking at the ones that are look like they've been. See that this one has been touched there, been touched there, touched there. Okay, then there. It's been crossed a few times. Okay, so those are significant turning points. Okay, another one would be somewhere there. Okay, and this comes with practice. With time, you realize you can do it very quickly. And then one more I can put up here. There. So this is a 4 hour chart. So if I go to the 1 hour chart, I may have to put in a few more lines in the middle. Let's look at the 1 hour. Okay, so 1 hour, as you can see, yes, clearly there are some turning points within. Okay, but you don't put all of them. You put the significant ones, the ones that you see, you feel are very significant. For example, but now I want a different color. Okay, but I don't want yellow. I want light blue. Okay. So as you can see, I can say somewhere in the middle here, there seems to be turning points or a zone somewhere around there. Okay. Yep. Then up here, there seems to be another one. Okay. And then down again, somewhere there. In between here. Okay. There. So with that, then now I can comfortably go to the 15 minutes and do my trading. So I go to 15 minutes there. So if you look at that, without even saying anything, you can see the market is playing around those zones. Okay, so it means when the market is up on the higher zone here, you're looking for sales, opportunities to sell. So from the left going to the right, as it comes, you know where it's going to touch. It's going to touch that zone. And then it comes up, it comes down again. Okay, so it plays here for a while and then goes down. Okay, comes up again, goes down till there. So as you can see, it's just playing within the zones, the zones, the zones. All right. So this is where again I keep telling you that there are many opportunities for breakout trades. because you can see there's a lot of consolidation. So if we start from the left going to the right, um, around here, there's opportunity for consolidation. This market consolidated here for a while, and then it broke out. It broke out up, then it also went down. So this could have been a breakout trade. Breakout trade, either you set it up in the morning or a few, because this is like 15 minutes. So it took a while to form that. So you knew when it was forming. So that's an opportunity to trade for breakouts traders, or snipers. Then it came down. Okay, this one is a uptrend, uptrend, uptrend. Came down. This one's uptrend, but it could also have formed a channel. Okay, again, this is a channel. This is a channel. The one down here is clearly a channel. Up here, not really a channel. Up here, yes, a channel. A little bit here, small channel. This one here, a channel. Okay, here a channel. Here a big channel. Again, a channel here. So the channel can be horizontal or can be, climbing. Uptrend or downtrend. So there, I think I can stop there, and we don't want the video to be too long, so we want you to ask questions if there are any. All right, questions. So I will pause the video so it's not too long, but while you're here, you are allowed to ask questions. All right, questions.